I am Milos Marjanovic. Nice to see you all at this lecture. I am today going to be talking about big corporations. Yeah, this is like notifications. I need to turn off my sound there. Sorry, setup is annoying. Okay, so I'm going to be talking about big corporations. This is a bit different than what I usually do, which is like economic lectures, economic development. And this is usually going to be a bit more in depth about corporations in particular. What I'm not going to be talking about, like even though it might be useful for you, but like there is just no time if we want to delve deeper into corporations. I'm not going to talk about that much about financial markets. I'm not going to talk about like stock markets as well. I'm going to talk about stocks to some extent when I talk about like market capitalization of companies and like how companies are gaining money and like raising capital. But I'm not going to delve into how stock markets operate, work, and stuff like that. Like I'm hoping that somebody else is going to do that in their own lecture. Also, a disclaimer. I am going to simplify things. The reason why I'm going to do this is because like this is like some people study this for like a full university course. Like there's so many things to cover. If I don't simplify some of the things, it might get too complicated. I might need to spend so much time into explaining some of the aspects of it. And trust me, even though you're simplifying, most of the people that are debating are simplifying things. Most of the people actually don't know a lot of stuff about this, which is quite sad. But the knowledge that you are going to gain and the simplifications that I'm giving you is going to be quite enough for you to win the debate about big corporations breaking up monopolies, or like where you have companies as a stakeholder. So let's delve into it. So usually like there is not that many debates that are directly about corporations. Usually they're mostly broadly even either about the economy, about something that government should do about the economy, or they're the stakeholder in some of the analysis. So the first setup that I'm going to do is mostly for you to understand the corporate structure, and mostly for you to understand how corporate companies operate. And for some of you, this might be like old news. You might know it, you might have learned about it or something like this. But for some of you, this will be crucial if you want to be nuanced in explaining what are the different incentives that companies are having, like past they want to maximize profit, because like there are so many moving parts within one company that this is something that I will cover. I'm going to be checking my phone, not necessarily not for checking messages, but I have I have written some of the reminders for myself in the phone because it's easier for me to look at that rather than open the Word document. Okay, so let's firstly talk about the broad division between the corporations that is like being public or being non-public, publicly traded company. Basically, this basically means like publicly traded company means that the company stocks are published in one of the stock exchange markets of the world in this situation. That has some drawbacks and some positive side. And there were some debates in the past that were dealing specifically with forcing some big corporations to go public or and stuff like that. So there are large corporations that are deciding not to go public and actually not trading their stocks on the stock market. What is the basic difference? The basic difference is if you're a non-public company, you have different regulations that apply to your company. This is especially true for like publishing some of the financial reports, having some different obligation towards shareholders, because in a non-public, not publicly traded company, like I'm not going to use the full term always, you're not necessarily able to sell your stocks to whoever you want. If you own a percentage of a company, if you own equity in a company, you're not necessarily allowed without without other people from also that are also owning the company allowing you to sell it to somebody else in this situation. So it's not that liquid. And also like usually this is so that's it. Like the difference, the opposite side of it is a publicly traded company, which is basically the reason why you would want to go public is because if you go public, a lot of people who own equity in your company, like if you are an owner of a company, if you founded a company or something, you usually own a certain percentage of a company. This means that you can raise a lot more money because like your stocks become more valuable because they're traded on a public market and you have like a public price for it in this sort of situation. But on the flip side, you are scrutinized way more. There is a chance for people to throw you out. Like if more people gain like a lot of shares inside of your own company and they don't like what you are doing, they have now a say in your company and what you need to do and what you need to, what the company direction is going to be in search. So there are risks associated with being a publicly traded company, like losing some of the control, but also it makes you a lot more money, and also you can raise a lot more capital if you offer this stock to a lot more people than necessary. So what is a stock? Like this is also like a basic thing in search. So basically this is like a signifying that I own a percentage of a company. So, and depending on how many shares are issued by the company, this is completely determined by the company in the association. That means how much percentage of a company I am buying by buying one share of the company. And this can yield me a couple of things. Why would I even buy stocks in this association? This can yield me like dividend payments, which means that like each month or year or however you have an agreement on, I'm receiving a certain percentage of the money back for just holding this stock and just holding on to it in this situation. That's one reason why you would want to buy a stock. The other reason is speculation, right? Like you think that the stock price is going to rise, so that when you sell it, you're going to sell it for the more than when you bought it in the first place in this situation. Which means, and what does a company gain in return? Issuing stocks is a great way to raise capital, to raise like money from the company, because like when companies are issuing stocks, they're basically like selling parts of the like equity of their company in order to gain in order to gain a lot of capital, which they then can reinvest. They can penetrate different markets. They can have a project that they're willing to push their company towards in this sort of situations. That's one of the ways to raise capital. There are definitely other ways that companies can raise capital, obviously, by borrowing, by issuing bonds. They're not allowing you to have a share in the company in a sort of situation, but like stocks are maybe like we're gonna come to why they're crucially important in this sort of situation. What is also what is a trend currently in the large corporation market in this sort of situation is that stocks, and especially when people inside of the corporation are owning a lot of them, like if you're a CEO, you're owning a certain percentage of the stocks, like you might be getting some bonuses, like employees might be getting some bonuses in the stocks. This means that you're basically companies are trying to tie their own success in the stock market with with the money that they're going to gain by their stock rising in value and by them holding it in this situation. The issue is that the value of the stock does not necessarily correlate the true value of the company itself, right? So this is what like a lot of people are trying to gauge what is the actual value of the company, because usually it's price of the stock is usually way and if you combine all the stocks is usually way more than all of the assets that the company has, which means that a lot of it is kind of a speculation. Where do you think the company is going to go in the future in this sort of situation? Do you think the company is going to be rise, so their assets are going to rise, so also that you're going to be able to sell it, or that you're getting steady dividends in this sort of situation? So this means that artificially tampering with the stock and maybe increasing it in a sort of situation is not necessarily what increases the actual value of the company, but is increasing their perceived value of the company. And that's also quite important, right? Because this is not despite what people especially people who work in this market want you to believe, it's not necessarily a precise scientific truth that you can determine this company is owned this much. But if you would know this, you would be a billionaire right now. You would beat every market, which is almost impossible at this sort of situation. Which means that there are different different people in the company who have different incentives and with what they can do with the money. So this comes into play when a company earns a certain percentage of a profit, and when they can decide what are they doing they can decide what are they doing, what are they basically doing with their with their money. And they have several ways that they can how do you say, what they can do with the extra money that they're trying to, they can reinvest it, which means that they can grow a company even more, invest in a certain project, invest in research and development, innovate. And especially if you have a large competitor, then like basic game theory is telling you that like if they're investing in being innovative, they might beat you if you're not being innovative yourself, which means that you're pushing these companies into investing and innovating, which is usually good for the consumer, right? Like if you have innovations that decreases costs, usually it decreases the price of the good in this situation. The other two ways how you can like increase, first of all, your like perceived value of a company is basically to make your stock more valuable. The ways that you can do this is, first of all, paying steady dividends, which means that like people have a steady income by holding on to your shares, which means that the stocks are going up in price. In a situation, you can even issue a bit more. Or what has become a lot more popular in the past couple of years is this stock buybacks, which means that basically you're buying and like returning a certain percentage of the stocks back from the market inside of your own company, which is like increasing the demand for your stock and necessarily limiting like and shortening the supply, which means that your stock is going up whilst necessarily the stock price is going up and there is less of it in research, which is good. And like the arguments for it is because like you're increasing the shareholder value, of course, in this situation, but it's not necessarily money. Like you cannot really say it's money well spent. You didn't really spend money on something physical like research or some new products. You basically spent it to buy back your own shares, to increase the perceived value of these shares, so you can keep rising in share prices and people can continue investing it. Like a lot of companies have been like in recent bailouts in this sort of situation, like that are happening in America. Share buybacks were like conditionally prohibited. Like if you receive some sort of bailout, you cannot do it because like the US government has realized that this is not necessarily the most productive way that is like benefiting the economy in total, rather than benefiting just these, how do you say, corporate shareholders. And here we are going into like what are the like levers of power inside of one corporation. This is very important for you to understand. As I said, you have like a board, like you have a basic structure of a company from top, from CEO until the workers in this situation. You have shareholders. Like this is a basic division. Like obviously there's so many more, but like usually for the debates, these two will have some sort of a conflict, maybe even alignment in some situations where it needs to be broken by the government in certain situations. So what does a shareholder want? As I said, shareholder either wants more dividends and like being paid off a bit more, so it offsets some of the costs and some of the risks, or they want their stocks to rise so they can sell it at a certain point at a peak and sell it for more than they bought it in the first place in this sort of situation. Usually shareholders and like in CEOs in this sort of situation, they're usually tied back together by also like, I don't know, people employed on different higher upper management levels are also having a stake in the company by owning certain percentage of a stock or ownership, which usually means that they are actually going towards a certain like same goal in this sort of situation. But as I said, this usually comes at the expense of what you could do with this extra money and how this could influence, I don't know, the market or like companies staying afloat or some of these situations. So even if companies is necessarily giving out dividends, this is not necessarily per se the best stock that you can buy, because it means that it might be missing out on some, how do you say, expansion or something that other companies that are competing against them might like use and push them out of the market in this sort of situation. So this division between like what is the best for the company in the long run and what is best for shareholders, like usually in the short term, is somewhat in tension, is somewhat in like clash when you have some of these debates that you can use later. So as I said, the other thing that the companies can, how do you say, utilize is this research and development. And usually research and development comes into play the larger you are, research and development has some sort of a risk, right? Like you usually do a research in order to innovate, in order to like place a better product, cut some cost, or do some of these things, right? It has a, like some sort of a cost that you're not necessarily certain is going to be paying off, right, in the future, right? Like you don't necessarily guaranteed to innovate or do some of the amazing things that you think are valuable and they're gonna better your company in this sort of situation. So this means there's a risk associated with doing this, but there is also and also like what you are aiming for, not necessarily primarily, but like what you're also aiming for is possibly getting a patent on whatever how they say you are innovating for in this sort of situation. And patents are usually like stamps that like last, let's say, between 10 years in pharmaceuticals to 20, 30 years, depending on the country, that says that you are the only person that can benefit from this technology, and you can sell it, you can issue some of these, some of these licenses, but nobody else can do it without your own consent. Nobody else can, benefit and profit from it. 1 second, I need to turn off Facebook again. Yeah, big tech. So, as I said, the larger you are, and like this is where we come to the big corporations, and possibly this is where we will come when we talk about competition and clash. The larger you are, the more money you can gamble with this research and development, right? Like if I'm a multi-billion-dollar or trillion-dollar company, like I don't know, Google, I have the means to actually to actually spend on products that have a very low chances of success, right? Because I don't mind wasting this money if it can lead me to some of the good innovations that are happening, which is not necessarily true for smaller companies or companies do not have like trillion dollars market capitalization, or they don't have a means to raise this amount of capital or money that they can reinvest in research and development. So that might be the benefit of being big, is your ability to risk more in this innovation and research and development. This is usually what you are going to be arguing for when you're talking about breaking up, for example, big tech companies in research. This innovation point comes with being big and with being large. But we're going to get to that when we go to big tech in particular. But this is just a concept to talk about. So what are these like big companies also? Like, and this might be surprising, right? But like 10 years ago, I think only 1 or 2 companies that are now on top 10 like largest companies by market capitalization are there, right? Like in the last 10 years, we saw the rise of big tech companies. So this is not necessarily something in 2010. Like Google was not on the top 10 list in the association. It was still like very valuable, but it was not there. So this means that even in 10 years period, a lot of things can change in what do we value, which companies are becoming more or less valuable in the association. So even though you might be perceiving some of these companies as like staying there forever, and you might be correct, you might be right. This might be completely true. It's still not necessarily guaranteed, and this is where people are talking about like blue chip companies, like blue chip stocks. It's basically like these large companies, like that will necessarily people believe are stable, that they have a lot of a market capital, market valuation, and they're going to stay on top and they can weather all the storms. This is not necessarily guaranteed, and we were wrong in the past when we were talking about like large corporations, whether they're going to stay in power in this sort of situation. And companies have been switching back and forth, like I don't know, General Electric, General Motors being like very valuable and then falling in value to some extent, having some of the crisis. So, and this is influenced by numerous things, right? This is influenced by consumer preferences, like what people are wanting to buy. It's influenced by innovation as well, right? Like what are we and how are we consuming? Consuming things, like maybe retail was like physical retail and shopping malls were amazing, like 20 years ago or 30 years ago, where we didn't have Amazon and we didn't have a convenience of ordering stuff online. But like innovation is basically killing these businesses in this situation. And some of these things, and this is crucially important, are very hard to predict, right? And this is why usually people are saying like you can't beat the stock market. Like you have all of these experiments that are like monkeys throwing dartboards and like picking stocks by randomness might lead to same results as like hedge funds like trying to beat the market in research. So market is quite unpredictable. It's a lot of the things are already baked in the market, what people are believing, like the prices, the prices that people are believing, and usually a lot of the things, a lot of the shocks are quite, how do you say, as I said, are quite unpredictable, and hence this means that even if something is perceived to be like a sure thing, it might not be in the future. It might crumble. You might like hit something like a COVID crisis that is like reshaping some of the industries in these sort of situations. So this is an important thing to notice, is that there are a lot of external factors that are not in companies' control that are also influencing how do you say, how are they going to be valued, how are they going to be perceived in this sort of situation. And there is also, as I said, like a bit of a less scientific thing, which is a belief that the company is going to be valuable in the future in research, which might be completely wrong, might be right in research. So this allows some of the companies with, like, if you were to look just at their, I don't know, like income statements, like if you were to look at their how do you say, financial reports, you might be thinking that the people are crazy for investing in, for example, Uber losing a shit ton of money like every year in association. But like the belief of people that this is going to change the transportation industry, this is going to, how do you say, this is going to change the landscape, or at least the belief that the next person is going to believe that, so that you can sell it for a higher price than you actually bought it, is what leads to these companies still being valued, even though they don't really have the metrics of success that you would call like steady revenues, profits, and research. You can also lose money if people believe that you're going to make money somewhat in the future and that you're going to be like very good. You can still afford yourself to lose money in this situation. But as I said, this is not something. This is again, to some extent, a gamble, and people have been wrong in the past and have been true in the past, and we have like seen a lot of like one of the more famous, like, it is the .com bubble, when like people were buying stocks in anything that had like basically .com in it, any companies, like even people like opening fake .com companies that receive a lot of like stock buys is basically telling you like how much, like when there are times in the market and there are times when like the companies getting big and companies are not necessarily based on like real world facts, and it's not necessarily going to last as much as as people would think. So goals of the company that are big is basically to try to avoid becoming obsolete, and basically to avoid to at least try to be future proof to some extent, right? Like to make their company not completely be, or their product not completely be wiped out by, how do you say, by future innovation or something like that. So this is why usually companies are trying to like pursue somewhat strategy of diversification, or at least companies who are holding these companies are trying to have a holdings in a how do you say, different array of companies, like from retail to like, I don't know, manufacturing, natural resources or something like this. So you're trying to branch out and to offer more products in order for, even if one of your products fails to some extent, you have assurance in another product. That's one of the reasons. And also because you see some synergy in it, right? Like if you open up, I don't know, like if it's Facebook, you open a cryptocurrency, you have a synergy with your core product, Facebook, in terms of like gathering data and gathering big data to sell to advertisers in this situation. So diversification in some of the areas also brings you money in the status quo as well. So you're trying to make yourself future-proof. This is also one of the goals of the companies in this sort of situation. Also, one of your goals is to cut as many costs as possible, right? Like you're trying, like this is one of the reasons to innovate, right? It's not just to make like the better product in terms of the specifications, but also to make the products that you're already making cheaper to produce or something like this. So this is basically allowing you, if you can do it, allowing you to be, first of all, more competitive like if you can set a lower price than your competitors are gonna run out of business. But also allows you to charge to have a larger premium, even if the prices stay the same, and like you can gain this money. So this is usually done by, as I said, like one, innovation, and like trying to make like production costs. And usually it's at the cost of some of the things, or of some of the things. For example, like best ways to cut costs is usually automation, right? Like if you can automate the job and like buy a robot, basically they can do the job, they can do this job more efficiently, and like that you're not paying salary to, rather than just maintenance in this situation. This is something that is like in the interest of a corporation, to some extent. Also, like outsourcing and like having supply chains that are like cheaper and switching them to some extent is also something that is in your interest. Like buying raw materials, or like having a power plant in like America costs you way more than having it like in China or having it in Southeast Asia in this situation. This is also a risk to some extent, and this is what we've seen with COVID crisis, because like if you're reliant on one of these countries, and these countries has a shutdown like China has, like it heavily influences your ability to produce. And like even if it's like, I don't know, you've been producing for like a quite cheaper cost, at this moment, like if you can't produce at all, you're losing a lot of money overall in these situations. These are covering, so as I said, like, and also as I said, like outsourcing and like employing people to like suboptimal wages, like in everywhere, like even in Serbia, like having call center in Serbia costs you way less in these situations. So this is, all of these things are sometimes in tension with what the government, as like a government wants you to do. Like government would ideally, like US government would ideally want every American company, is what Trump is trying to do, to employ American workers, to manufacture all of these things in America, so America gets all of the profits, and like he can boast that the economy is great, even though he didn't have that much to do with it, right? So this is where you have like, I don't know, where you have tensions with internal governments trying to either regulate or trying to prevent, incentivize their own companies from, from staying in their own in their own backyard, and actually like continuing to produce. Okay, so let's then go into the meat of this. This is some of the basic concept that I had to go over. Like, even though, as I said, like some of you might know it, some of you might find this boring because it's not necessarily that important. But like it leads me to what debates are usually had about this, which is usually about competition. And let's talk about competition, like before we go into like big tech and their competition in this situation. So usually what the reasons why people are giving for, I just realized this is quite cool. Nazarbayev University mug that I didn't realize I picked up randomly. Anyway, just 1 second. Usually the reason the competition is valuable is that it leads to benefits to consumers, right? And it leads to in many different forms, right? It leads to a lot of free stuff, for the consumers, because you want to drag them back to it. It leads to a lot of discounts. It leads to a lot of cheaper prices, right? Like if I know that people do not have a choice, then pick my company, I'm probably going to be able to charge them more, to be able to have worse customer service. This is what usually is plaguing cable companies, right? Like if you have maybe one or maximum two internet providers or something like this is why their customer service are usually horrible, is because like, what are you gonna do? Who are you gonna switch to? Like, you don't have that many options. Is because you don't have that many options, and it's quite an essential good, like for example, to have the internet. Without proper competitions, they can say, I will fix your cable TV from 7 in the morning, like on Monday, until like, I don't know, 9 in the morning, 9 in the evening. Just wait for the cable guy to come, and they don't come. Everybody has these stories. Like even South Park has made an episode about it. So as I said, if you had a competition there, and if you, for example, threatened to go to the competitor, or the competitors like themselves would be trying to gain your attention, gain by improving their customer service, because like improving your customer service also is a cost, right? Like if you have to improve your customer service, this means you have to have more manpower there. You have to like employ people, train them, like have more equipment or something like this. So why would you do this if you don't have to? If it's not essential, if people are going to stay in your company or they're not churning at a bad rate, you're not going to be doing this. So this practically means that competition is what leads to, I don't know, as I said, like better product for the customer overall, more innovation, lower prices. And this is all quite important, especially if you talk about people who cannot necessarily afford like premium services in this sort of situation. Like where companies are most likely to cut these costs are people who like receive the worst, like the lowest, how do you say, service buying in this. So you can quite easily frame, like, and usually what is important in these types of debates and what people are missing is to frame why this is important, is to give it on a bit of a more human level, right? What does it mean to have a price decrease? What does it mean to have a better product if you are, I don't know, if you are poor, or have a better customer service if you are poor and you cannot really afford, how do you say, like a more premium product in this situation? This is all like quality of life changes that are like quite impactful in people's lives and people's abilities to do to live a happy life to some extent. So if you translated that more than competition, like we will have more competition, we will have more innovation, and translating and go one step further, what does this innovation mean? How does it improve human life in this sort of situation? This is quite more likely to stick with the judge and to translate in their minds, why should I care about this? Why is this the most important thing? And this is usually when you have a large trade-offs that you have to make in this sort of situation. Okay, so other things. Other things that are important about competition. So let's talk about some of the terminology, right? Like you have all of these being thrown around, like monopoly, like oligopolies, cartels, in this sort of situation. It's what people are missing in a lot of these debates, and especially when they're trying to argue against like breaking up some of the big companies in this sort of situation. It's usually the argument, but they're not a monopoly. Look, there is one competitor. You do not necessarily, like, monopoly in like this specific, like especially political term, doesn't really have to actually signal that you are one company, only one company, how do you say, operating in the market. It can also mean that you, first of all, have a threat that in the future you're going to become this company. But second of all, that you have a significantly dominant position that even though your competitors exist, they're not actually competitive, right? They're not actually they're not actually able to compete on you on price, and you have, like, I don't know, 60, 70, 80% of the market in your hands. So even though somebody can theoretically like compete against you, it's not actually a real competition. You're not actually doing all of this stuff, which means that you can start, you can start acting like a monopolist, even though you are not, right? Like you can start charging some of the premiums. You can start like fucking over the consumers, even though technically there are these competitors. And also, this is the framing. If we are waiting until it's the only one last player standing to regulate them, it might be too late. They might be the most important company in your country. It might be politically implausible for you to how they say, to change any of these things, right? Like the larger the company gets, the larger the downfall when you eventually try to do anything about them, which can also impact your economy, right? Like it can impact the stock market. Obviously, if we were to break up Google now, it will have an effect on the stock market, and obviously it will be a very tough decision for any president, any politician that wants to do it. You can even see the opposite, right? If you're too big, if you're too big, politicians do not want you to fail, want to give you all the money, bailouts in these sort of situations. So the larger you get, it might become almost impossible for you to regulate or to do any of this. So what we are doing in the status quo and what are being done is like closely monitoring mergers and acquisitions. So if you are already large and you want to buy your competitor, or you want to buy even a small competitor, we might not allow you to, even though it might be like a small difference. Like this snowball effect and having more and more people going there, it's quite it's quite risky, and we're not taking it. Also, your presence as a monopoly doesn't necessarily bar people from competing with you in terms of like they can't compete, like it's banned for them to compete, but it makes it super costly to compete with you, right? Which means that Google having 90% of the search engine market means that if I were to compete against them, I can obviously try to do it. It's not necessarily that I'm prohibited against it, but my costs are super hard. And I know that like if I start gaining some traction, that Google is also going to try to ramp up in this sort of situation, and they're going to try to compete against me. And I know that Google, or like let's give any other company that has a lot of market capital, can hold into this battle much longer than I can. So this means that if I want to, if how do you say, if Amazon wants to compete with my store, for example, they're very cheap, they can suffer losses for years without their stocks falling, or without people how do you say, having to worry about their about the company in this situation. I might only be able to do it for 6 months. So basically, the strategy for large corporations, if you let them go out of control, is basically to outlast the competition rather than anything else, right? Like I'm gonna like price below the market, lose the money, but in the long run, I will be able to, how do you say, raise this money in this situation. This is how lots of companies are operating on this level. A lot of companies know that you are gonna like lose money on some of the deals, like even like large retail chains like Walmart. They know that on some deals they're practically giving you money, losing money, or just breaking even when they're giving you deals. But they know that by hooking you as a customer and taking it away from their competitors means that when they kill all of the competitors, or when they kill most of the competitors, or when most people are used to their products, this means that they don't really have to do any of these discounts anymore, right? Because like you will not really have a choice in this matter. You have an interesting thing happening in like the from 2010s onwards, is that a lot of companies are actually operating on this business model, which is basically we are losing money, we're subsidizing our core product by doing something that is profitable, but we are losing money on our core product because we are trying to be competitive and trying to push away people from the market. And once we do it, we will eventually become profitable. This is what they're telling to their shareholders. It's not even, how do you say, it's not even a secret that this is what the Amazon strategy is. It's not even a secret that this is what Uber's strategy is to some extent. This is basically what they want to do. But the fact of the matter is that consumers, and this is why these regulations might be very difficult for people to do. Consumers are winning in the short term, right? Consumers are gaining a lot of like if you have a cheaper product on Amazon, for sure you are getting you like, how can you say something is bad if it's giving me more money as a consumer, right? But what you're not realizing, and what people are usually not realizing, is that these short-term gains are paid by the potential harms in the future. And this is a trade-off, right? And this is why these debates exist, and this is why these debates are balanced to some extent and can be run, is because like there is still, it's very hard for you to punish somebody for monopolistic behavior or exploiting their dominant position if consumers are actually gaining from this, and if they can also point it out as a how do you say, as a benefit rather than a harm in these sort of situations. So yeah, as I said, and this is also where like the question in this sort of situation, like corporations swing elections in this sort of situation. This is like to some extent, when you're a large corporations, and you know that the how do you say, market is that you're one of the largest exporters. This is usually even worse for like smaller countries. Like you usually don't have that many large corporations. You have maybe 2 or 3 national conglomerates, like I don't know, like similar to tribals in South Korea and this sort of situation, that are very influential in the elections, because the governments know that if these companies were to like fall, were to do poorly in this situation, the market and the economy of that country overall might be going down, which means that it might influence their election prospects, right? This is this vicious cycle, right? Because usually what politicians are counting on, and what corporations are counting on also, is that like politicians get to claim the benefit of the economy rising even without doing that much. And this is like usually a thing, right? Like you cannot really pinpoint that the reason why the economy is rising is Donald Trump tax cuts, even though he would really love for you to believe that, right? But this is natural for people to believe, because like people don't see a big CEO in the company, what they're doing like in shady stuff. They're seeing the president, right? And this is not just true for Trump. Like it's true for Obama. Like a trajectory. Like everybody wants to claim that their policies are the one who are saving the economy and doing stuff, without us ever being able to tell and know, is this like, we don't have a counterfactual world. That's basically the problem. We cannot really imagine what would have happened differently in the association. So it's really hard for people to imagine this, and it's very easy for people, the politicians, then to claim the benefits, which means that then also when they will get to claim the benefits, they also get to claim the harms. And this is the problem, right? Like usually when how they say, when the stock market goes down, with people not knowing and not realizing what do big corporations do. This is one of the reasons why people requested this lecture, right? Like people not realizing intricacies and like all of the moving parts of the economy. People who usually get blamed are the party that is in power, right? Like for the economic crisis, for what happened in this situation, which means that a company that is failing and that doesn't want to fail in this situation has a lot of leverage, especially if it's very huge, on the politics, insofar that if this company fails, a lot of people lose their jobs. Maybe the market feels it in total. Maybe we go into a recession or something. This is going to influence my election, how do you say, prospects, which means that all of that I've been doing I've been doing for nothing. So I have to do this. I have to bail them out. I have to do some of these things. So this is this correlation that I think answers your question to some extent. They don't really even have to lobby per se, right? They don't even have to give direct money, insofar that if you get big enough and you become like a national sweetheart in terms of like a very important company. As I said, like I'm mostly focusing here on the US to some extent, but this is true, even more true for any company that is large in your country that you're living in this situation. They're having such a huge influence, basically, if your how do you say, government is reliant on, and if their fault can do a lot of damage in it. And this is the problem. This is how do you say, moral hazard that is coming. That is coming. If you know as a company that you're very valuable, like in this true in social relationships, right? Moral hazard is basically, this means that if I risk it, I gain all of the benefits, right? Like if I risk in the stock market, if I risk, how do you say, some of these things, like especially big banks, I get all of the benefits. I get the bonus. I'm a hero. If I risk it and lose, like this is if I risk it and win. If I risk it and lose, I'm still covered because the government doesn't want to allow me to fail. Because if I fail, the economy fails in this situation, and they don't want this to happen. So this is a moral hazard argument, and without a proper incentive structure, proper control, this is what tended to like bore a lot of financial crisis, a lot of crisis in the countries themselves, right? So this is something that needs to, that sometimes you can address in the debate, not necessarily. Sometimes this is the debate. Like if you talk about in times of crisis, bailing out companies, like some of the information, concealing some of the information, not letting the public know, or I don't know, any of the policies that have like inside the crisis as their hand. Like moral hazard usually plays a large part in terms of what is this policy that the government is proposing, or whichever side is proposing. What is this doing to perceived risk of decision makers in these companies? What does it mean? Does it mean that even if they risk it, and we are covering their assets, which means that they're going to continue to risk it, continue to play like basically casino with the government money to some extent, because they know they're going to be bailed out in this sort of situation? So this is why how do you say, getting too large might be a threat to democracy, right? Because like if you get too large, you are necessarily forced to listen to them to some extent. And it's not necessarily, you might see like, politicians, crooked, they're listening to them. It's not necessarily even a bad deal to listen to them, right? Because I was like a bit cynical in talking about like, but how do you say, they're talking about they're thinking about their election prospect for sure. But also, if you know that the company that fails is going to trigger a recession or fire so many people, 30, 40, 50,000 people or something like this is also might be a sound political decisions. And you might be like even like this might not be from corruption perspective. It might be from the perspective of, I don't want people to suffer, so I'm going to bear this cost to some extent. So it's not necessarily always, it's not necessarily about corruption. It's about companies by being this big and behaving this big, forcing government's hand and making it a, win-lose situation. Like I take all of the benefits, you take all of the losses, which is very bad. Okay, so let's then go, I hope this answers your question in this thing. So let's then talk about tech companies in particular, because tech companies, I think there are like 7 out of 10 top 10 companies by market valuation in the US currently. I'm not sure, but I think that's the ratio. So the benefit of tech companies, like, and why they can basically do what they do, is that their marginal costs are quite low, right? Because like a lot of their products, like obviously they have costs, but a lot of their products is there, and it doesn't have additional cost as like a traditional, how do you say, I don't know, retail manufacturing or something like this. So if I create an algorithm or create a product like YouTube or something like this, like I might need to pay for like, I don't know, server storage or something like this, but like I don't have additional costs by people joining my service. I just have the benefits in this search, which is quite different if you have to make a second car, third car, or something like this. So they have like the benefit of like somewhat lower cost in the products that they're making in this search situation. They also have been quite popular within investors because they, as I said, one of the perception is that this is the future. These companies are going to rise. So they have been allowed to lose money on a lot of products and still be valued quite high. So for example, Amazon is losing most of its money on the deliveries, on how do you say, especially with one-day deliveries in this search situation. And the reason why they want to lose it is, like, remember when I said like a couple of minutes ago, it's because like if they push out other people from the market, I don't know, like let's say delivery services like mailing, like UPS or something like this, like let's say they push them out, they become the only one online retailer or significantly dominant online retailer, which means that they can rise prices. So this means that they have been able to offer a lot of discounts. They have been able to offer, like, I think something ridiculous like 10% cheaper than a retail store or something, these products, which they're basically losing money on this. But as I said, they're gaining in market share and market value. The way that they're paying for this, and this is why this can continue, and this might be important when you talk about breakups, is because they have a profit-making business that they're not necessarily in your face and public. So for example, for Amazon, this is AWS, which is Amazon Web Services, which means that they're basically selling cloud storage for most of the online companies and most of the tech companies use AWS in this situation. This is their most money-making business, actually. If you were to see where they make the money, you might firstly guess, how do you say, deliveries, like, I don't know, in online retail. No, actually, it's like basically selling cloud storage to some extent. So this is why they can fund other businesses by one of the businesses being profitable. This also means that they can buy a lot of different stuff and become, as I said, diversify and try to conquer all of the other parts of the business. So this means this is how they were able to buy, I don't know, Whole Foods. Like, this is like the physical retailer where they're trying to now convert it to, I don't know, like an automated system completely in this situation. This is how they bought like Twitch, like this is gaming streaming service for people that don't know. So they're trying to, like, Amazon Prime, trying to compete somewhat with Netflix, not necessarily completely, but this is what they're trying to. They're trying to offer a wide range of products. This is all for, most of these things are either there to pay for the core business, which is like online retail and like the delivery service, like, and to pay for the losses there, or are there as perks for the online retail in this search situation. So Amazon Prime is not necessarily something that sorry, Prime as like as a streaming service is not necessarily that more popular than Netflix, but it's a great perk because if you buy Amazon Prime, you get like Twitch Prime, you get like 1-day delivery perks. They're basically trying to buy and make customers using Amazon services where they're in the future gonna make more money off of this in this situation. They're also the company that is utilizing a lot of these stock buybacks thing, which is meaning that they're giving a lot of stocks to their employees, like to higher management, and they're also buying back a lot of stocks and increasing their own value because of this. So, as I said, this is like I'm gonna cover like a couple of them and like the debates about them. So the debate that is there is like and that was there in World Schools, I think, was like break up Amazon. Usually what people are struggling with is what is the model, how do we envision this in this situation. Usually it's very simple, right? Like you would so sorry, let me just read the question. So the question is, what could possibly cause investors to lose confidence in these tech companies, especially? That's the thing. It's quite difficult. Like it might be a huge competitor that is coming up. It might be a huge innovation. For example, it might be a Chinese company that is like innovating out some of these companies. Like for example, like let's say that Uber gets like let's say that Didi, the Chinese company, like gets a huge innovation in the how do you say self-driving cars market and tries to completely control it. This might mean that how do you say now I don't really see a future for Uber and I might divest my stocks and I might sell them off in this situation. But currently, and this is actually a good argument, like good framing that you can have. Like investors themselves are not going to be like losing confidence in this, which here's several reasons why they believe in Amazon in this situation, which means that they have all upsides and not necessarily market is not necessarily going to solve for this. So we have to solve for this as the government, because this trust in their company and in the ability to do all these things is necessarily going to create horrible things in the future. As I said, Amazon doing some of the how do you say antitrust practices. So for example, what did Amazon let me continue. So as I said, like the most basic model is breaking them up into like AWS, Amazon, Twitch is their own thing in this situation. The problem with this, and like I'm operating like all of these things are true for like all of these principles that I'm saying is true for all of the tech companies. So I'm gonna be shorter on them as well, but I don't know why I started with Amazon. I just started. All of these might not be able to fund themselves and might have to change how they're operating. And this might be good or this might be bad. And this might be an argument for op and also might be gov argument in this sort of situation. It might be benefit for op when you talk about this research and development. Remember when I talked about like if you're a large company, you have much more money and you're much more able to be risky with the money and the capital that you can invest in different projects. It might not pay off, and most of them do not pay off. This is also good framing. Like most of the research and development is a dead end, right? Like you start to research something, it sucks, it's not important. Or you start researching something and then somebody eclipses you in technology, then you shut it down, right? And this is a wasted money. You're never getting it back, right? Like basically you're not getting anything from it. So you have to have a strong reason. So first of all, innovation might go down. But second of all, some of these companies that I told you, right, like they're operating on this business model right now, they're losing money and not necessarily able to cover themselves. So that might mean they're gonna increase prices. That might mean I don't know how they're gonna operate. Like this is something to analyze. But like this is the possibly negative, possibly positive side from it. Possibly positive side from it is that this encourages competition, right? Like if Amazon has to increase prices, this means that somebody might be willing to innovate on something else or like enter the market and compete with them with what they can't do at this sort of situation. The interesting thing to think about when you're talking about these breakup motions is possibly the role of foreign companies and specifically maybe Chinese companies that are trying to compete with this. So for example, Alibaba has similar-ish model of delivery and like trying to expand as Amazon in this situation, and maybe trying to talk about like negative repercussions of who is going to be the competitor of Amazon, and why might that be bad or good or something like this, is something to consider in these types of debates. But as I said, and as I said, what is the problem with Amazon currently? And like this is the thing. Like a couple of things that people are saying is like the workers abuse in this situation, and like people working in horrible conditions, even though they are paying them to some extent good. Like it's $15 minimum wage or something like this, but still the conditions are not great. They had huge reports of horrible things that happen in the factories, and this is usually tied to a lot of people wanting to work for them. And this is usually why their defense, this is usually, how do you say, this is usually, I'm going to answer it in 1 second. This is usually why their defense of, but we're paying them very well is not necessarily great. Because like if you pay people well, this means that even if you're doing a lot of bullshit and horrible stuff, a lot of people will be willing to work for you anyways, which means that, how do you say, you can have horrible conditions and people will be working for that condition. So you don't have to improve conditions if you pay people more to some extent. So let me read the questions just 1 second, and I'm gonna continue. Yeah. So the best. So it's quite. This is the problem with a lot of these services, and this is why Amazon is not necessarily the best example of where this can go yet to fuckery, right? Usually the easiest model for you to do from government is to talk about different services that are grouped together are going to be now their own separate companies. So as I said, their cloud service company like AWS is now AWS. They have nothing to do with Amazon. Amazon delivery, like an online retail, is its own thing. Twitch is their own thing. Filmmaking, as you said, is their own thing. That's maybe the cleanest way for you to break it up. It's not an easy thing by any metric, and this is why I think what can be the problematic thing about these debates. The other possible model for this debate is, what if you broke one service into two services? So for example, let's say you force Google to have less capital in like search share engine. This is quite more difficult. Like I've seen some people do this model. It's quite more difficult because like a lot of these things are to some not natural monopolies in terms of it's quite like it's usually based on people's habits where they do it. So even if you were to make break Google search engine into like two companies and like make them share their profits, people might still gravitate towards one of them in the end. Like I said, in the beginning you had Yahoo and Google, and people just gravitated towards Google, and Yahoo died. In a counterfactual multiverse, Yahoo might be the most popular thing, and we might be thinking about motions of breaking up Yahoo rather than Google or something like that. So there are some random factors there. So as I said, the most clean way to do it is usually just, here are these separate things that these companies are doing. Here's why we break them up. And as I said, the benefit of this, and it might be the harm, it might be the benefit, is, as I said, they are using, for example, Amazon in particular, they're using AWS, Amazon Web Services, to fund losses in their online retail, which means that they are not playing a fair game, right? Because like if you are operating on losses, this means that you're not really innovating, you're not really doing that, like you might be innovating on the side, but the reason why you're winning the competition is because you're throwing money at the problem. Obviously, if I was to open a company, like let's say I open an Amazon competitor, and I can offer things for 50% of the price of Amazon, everybody's gonna go to my platform. Like definitely, because like people are price sensitive, most people buy based on price. But I am not really innovating there. I'm just wasting my money, counting that people stick with me, leave Amazon, Amazon falls down, and then I raise prices, right? So if I remove AWS, they might not be able to do so. They might have to raise prices, and that's true. But that means that other competitors can compete. That means that they might not be able to compete on price, but compete on service, compete on something else, which might be great, right? So this is how you try and balance. And this is true, as I said, this is true for most of the tech breakups. I just give you the example through Amazon, but it's true for everything, right? It's true for, as I said, Google. Let's break Google into Google, YouTube, Android. I don't know, like they have a shit ton of things. Like I'm gonna go into this. As I said, most of the trade-off, innovation probably gonna go down. Prices probably gonna go up. You might be able to pay for it. Competition might be able to go up, and this might be crucial and important for a sustainable, how do you say, market. Because like you can't claim for government side that this is fake benefits for consumers. This is benefits for consumers insofar that Jeff Bezos is throwing money at the problem rather than actually innovating. Let me see the question. Very little. That's the problem. So the question is, what can developing states and local companies do to mitigate the harm and compete with large corporations? Very difficult. You have to offer, if you can't compete on price, which is the most obvious thing, you have to offer a different kind of service, right? You have to cater to a different kind of market in this situation. So if you're a small mom and pop shop, you might advertise that. You might advertise, consumer awareness, like, or like, I don't know, be green, do some organic stuff. You have to market in a different way, because you can definitely not compete on the price in this situation. Developing states are usually not competing that much insofar that they are trying to get these jobs themselves, right? Like trying to get the Amazon center to open at their state in this situation, and somewhat cannibalizing their own businesses in this situation. So it's very hard for small companies to compete. Like that's why you would want presumably to how do you say, to compete with them at a local level. And this is crucial, right? And this is also framing, right? If now everybody during the COVID crisis is buying shit ton of stuff on Amazon, and they're not going to my local store, I'm closing down. And Amazon is getting all of my customers. So all of the people who were maybe going to be in my store are now going to Amazon, right? Reboot competition. Yeah. So this is why this is for some of these large corporations, maybe the breakup is the thing. Maybe you have to regulate them. Maybe there are different mechanisms. This is also a thing, right? You don't necessarily have to break them up in order to ban some of the practices, but regulation might be super difficult, because it's super difficult to determine sometimes at what time is the company wasting money and like funding losing projects, or at what time they're just trying to compete. Because like sometimes this is a legitimate strategy, right? If you're trying to, without wasting money at some point, no new businesses would be created. Because if you're starting a new business, customers don't know you, you have to offer, like even at the small scale, people are doing this, like in the smallest of scales. This is why when the fast food, the restaurant, like random fast food restaurants opens up, first week 50% off or something like this, because you want customers to try it, to go to your place. So there is a very fine line between this being a legitimate competition strategy, like in trying to compete on like discounts, doing all of these stuff, and trying to outlast and price out all of the competitors by just throwing the shit ton of money at the problem, right? That's the issue. Regulation, as I said, might be limiting some of the bad ways. Like for example, the European Union was very good in how do you say, in finding some of these companies. So for example, Apple. The way that Apple is using their dominant position is mostly has to do with iOS store, right? So Apple owns, as I said, Apple owns Apple phones, like iPhones, like Mac computers. They own, how do you say, they are now expanding into how do you say, banking to some extent. But the main thing that they're exploiting currently is their iOS store, right? If you want to post as a developer, as an app developer, you want to post an app in the iOS store, 30% of the revenue or 30% of the buy price goes to Apple. And this is like Spotify has raised a huge, I think even lawsuit against them because of this. because this is a monopolistic practice. You are not allowing, you are supposed to be a platform where people can post their stuff so people can buy it, but you're basically charging they're calling it racketeering for holding things like this. Android is not doing this, and this is good. But like Apple has been fined in the past for abusing some of these positions. This is how these companies can abuse their positions, right? And like it very much matters what is going to be the first thing that you see. So for example, if you're Amazon and Amazon is trying to expand into, for example, manufacturing some of the products, right? So manufacturing some of the groceries, manufacturing some of the like electronics or something else, right? If I was to search at Amazon for something, grocery, it very much matters what is the first seller that they show me. If the first seller or second seller or what discount are they showing or whatever, if the first seller is Amazon and their own branded product, like they're also promoting themselves on their own platform, which is quite problematic, right? Because like if they control the platform, they advertise, it's very difficult to compete with somebody who controls the platform. And this is also a type of debate that is happening, right? Like these tech companies are trying to go into, like you can expand and diversify horizontally in different levels of market, but you can also do it vertically, right? Amazon is currently operating a platform that sells stuff and delivers. And now if they manufacture stuff as well, then they have all the levels of supply chain, all of the levels of the market co-opted, right? And the synergy between these is enormous. And they can, first of all, get a lot of benefits from this. And this is problematic. This is also the thing that you can state when you're breaking up why is this problematic. But also this is something that might become as an independent debate. I think I saw it once, which is disallowing this chain of happening. And as I said, this is true for Google, Facebook as well, right? Like for example, Facebook's main competitor is Instagram, which is owned by Facebook, right? It's quite like they're co-opting this huge market of how do you say huge market of, I don't know, social media by themselves. Like just to outline what is the most important things that these big companies are owning is that Facebook is owning Instagram, Facebook, Instagram, and how do you say WhatsApp. This is main chat services all around. Facebook has 2.4 billion users, which is huge. Google main services, as I said, like two largest search engines are YouTube and Google, and both of them together are 90% of the search market, which is crazy. How do you say? Principal argument. So the question is, what about principal argumentation in this motion? I don't know. So it's very difficult because principle usually have to be very consistent, right? Like you have to have something that is like rock hard, right? You have to, like, if you want to do a principle of, for example, freedom of corporations, and I saw this from a position. You don't break companies; they have their freedoms to operate however they want. You then technically have to also defend never trying to break out. Like, what is your line that you're willing to cross? And if the line is we should never break up any companies, this might lead to horrible situations. Like as I said, this might lead to total monopolies. And like because it's such a fine line, the principle becomes that much harder to do. Because easiest way for me to break your principle is to try to make this principle much, like if you say it's unjust to break up this company, I would ask you, like, oh, what if they own 100%? What if they own 99%? What if they're charging stupid prices for this or something like this? What if they're threatening democracy? Like, in what case would you be comfortable? And there's so many ways for me to try and make the principle, first of all, for you to seem less principally relevant in this sort of situation. And then, like, the most reasonable thing, and this is what like left and right people are agreeing, is that some level of antitrust law and like disallowing people to become monopolies is necessary. This is not controversial. Like even in libertarian circles, like this is somewhat, not necessarily every libertarian, but this is somewhat not controversial. That sometimes monopolistic behavior and some of the breakups are necessary for the functioning of the economy, or we will be completely fucked with this. So as a Google owns how they say 90% of the search engine market. Yeah. So here's where we come to this important like data point, And the problem with these companies usually is that as I said, Amazon found a good way to offset their cost, which is selling cloud services, right? Some of the other companies, the way that they're offsetting costs, and as I said, Google itself, like Google as a product of, the company's named Alphabet, right? So Google itself, right, like a search engine, and YouTube are losing money or barely breaking even. So that's losing money for them. They are advertising there, of course, but with this, it's losing money, right? So this means that usually what they're doing is that these services are, first of all, as I said, trying to gain the market capital, trying to make people, use Google infrastructure more, so they can sell other products, they can sell more advertising. But also this big data that they're getting is huge, and they can sell it to corporations, so they can they can pretty much they can pretty much make money off of this. This is a problem, right? Because we saw a lot of data breaches in the past. Facebook was mostly attacked by this in this association. The security, Cambridge Analytica influencing the election. This is also quite answering the influencing the election part, right? Like if you control this amount of data and store this amount of data, which is basically knowing before people know what they want, right? Like you basically by analyzing search results, you can know stuff that people didn't tell anybody, right? And this is a problem. Like Google knows you better than your mother, father, like friends in this situation, because like what you type in Google incognito mode as well, is usually what you wouldn't tell to people, right? Like when you don't want to seem stupid, you would Google it, right? In this situation, this data is very sensitive, very huge, and can influence and shape, as I said, elections, what people want, what people don't want. And this is what is also in this debate, right? It's not just about this is a threat to the market economy, of course. This is also a threat to potentially like democratic process and the power that these people have over us and over our democracy in this situation, if they have this much control over this much of data that can be abused, misused in this situation. And as I said, usually people then go into but regulation is super difficult in a lot of these cases, right? Because like you like first of all, regulator, like have you ever seen fucking regulators that like this is what the funniest thing, right? Because like usually people are like counting on regulation is gonna solve, right? But just if you want to see how regulators solve stuff, just go and see the interviews in Congress for Zuckerberg or any other tech person. Like there are some smart people, of course. There are some people who ask smart questions, but there are people who fucking don't know phones or anything, right? And these are the people who are regulating the thing that you want to regulate, right? And these are the people who are influenced by these companies as well. So this is why regulation is usually maybe possible, but very tough to achieve. And this is a framing that you can use in these types of debates. So accumulating this amount of data gives them also an upper hand if they want to themselves to enter some of the industries. If I know how much people have demand for this type of food, what they're researching here, I have much more information, not just on my own industry, and my own industry in terms of like tech. I can much easily expand into any other industry because this data is free for me. I have it and I'm collecting it. So this means that it's very easy for Google, if they would want to step into and fill other shoes in the market. And this is what they're trying to do. They're baby steps, right? Like Apple is going into banking. Facebook is trying to go into banking, like with Libra in this situation. But these things threaten to leave us in the place where a couple of companies are controlling most of the things that we are doing. And the threat of that, remember, is first of all to our democracy, to people not willing them to fail. And also, once we decide that this is too much, it might be too much of a cost for us to now do it. Because if we break out Google now, we might have some economic consequences. But if Google grows even more, absorbs like this many companies, like even let's say Amazon, that is even worse, like absorbs retail, and then we want to break it up, the effects of this might be huge. So this you might frame it as a ticking time bomb, right? If this continues this way, in this trajectory, we might not be able to stop them at a certain point. That here is why, like, we're willing to buy this. So this is also a framing that you can use in this sort of situation. So yeah, so this is basically on tech companies. The other thing to note is that there is an unexpected competitor coming towards tech companies, Western tech companies, and this is Chinese tech companies. And this might be dangerous, right? And this is why. So as I said, remember all of these things about data, how data is very valuable, and knowing a lot of stuff is very valuable. And this is in the hands of United States companies that are somewhat independent, that are still not giving US government everything. For example, you had a case where US government wanted Apple to crack the phone of a suspected terrorist. They didn't allow them. They went to court battles. So you still have courts. Like China doesn't, right? Like China basically, even though there is a level of separation between the companies, the Chinese companies and Chinese Communist Party, it's very mild, right? Like still Chinese Communist Party, if they want some data, if they want access to the company, they will get it to some extent, right? This means that companies like Alibaba, Tencent, and company I always forget what the name of the company is that owns TikTok, are quite dangerous competitors that have other implications that are not just that are not just economical, but have to do with IR and security. So this is how you can is there a difference with, so just 1 second, like I'm answering, is there a difference with breaking up a sub company of a company such as Google to Alphabet? I mean, I'm not sure that it's possible to break just Google, because like it will still probably be, it will be very difficult. The main difference is that, as I said, if you break up Google inside of Alphabet, let's say we break it into Google 1, Google 2. Over time, most people, because it's convenient, would gravitate towards one of them, and it's mostly like, and there's two difference, right? Like imagine one of them stays with Alphabet, that one will win. Like the other Google 2 will lose over time. Or if they both are out of Alphabet, then Alphabet makes another one. Or let alone Alphabet doesn't make another one, Facebook makes another search engine or something like this. So some of these things might be less effective. So this is I hope this answers the question. So Tencent, Alibaba, Institution, they're companies who are owning so much that you are not necessarily realizing because you're not living in this ecosystem. So for example, WeChat is owned by Tencent, and they are basically, WeChat has everything inside of it. They have, like, you can call a taxi, you can call a delivery service, you can, just 1 second, you can call a delivery service, you can chat, you have integrated almost everything in that. Also, they own a lot of Western companies as well. They're also buying up. Like Tencent owns Riot Games, which I play, like League of Legends. So basically, they're trying and buying up different sorts of the market, which might have different implications. TikTok is the most downloaded app in the App Store from the last information. I might be a boomer on this. I don't use TikTok, but I heard it's very popular. The problem with this, there was already already problems with tech companies with data breaches, and like, do you want Chinese Communist Party to possibly have this information? Not necessarily now, but potentially if they need to, in security breaches. So this is why a lot of people are trying to see how do they regulate. And obviously, this is unfair. Obviously, the US is favoring their own companies. So this we are seeing the side where economy is not really, like, people are picking their own winners and losers. China is funding their own companies, US, trying to protect their own. But it has some other, as I said, geopolitical implications that are there that might be important. It also influences access to the Chinese market and access to other markets by the Western companies is also influencing how they're behaving in total, right? So this means that if you are, if you want to enter Chinese market as Google, or like a lot of these companies are not in China because like they don't want to be not necessarily they don't want to be, they don't see as much profit in, how they say, censoring themselves, and they see potential backlash there, but they're trying to do so. Like, it's not like they're not trying to do so. Google has been in China. They're trying to work and create a different server, different version of Google that will be working in China in this sort of situation. Similar with how they say, with other companies like Facebook, Apple. So it's a different battlefield. And the problem with this, and there were debates about China and Chinese, like Western companies going into China and censoring themselves in this sort of situation. There are, how do you say, this is basically a battle of, how do you say, what people are used to, right? Similar, as I said, like you had Yahoo and you had Google. Google won, everybody's using Google, nobody remembers Yahoo. Whoever uses Bing, nobody, right? In this sort of situation. So this means that you are trying to do this and to become a main platform everywhere. So this is why it's in Google's interest in this sort of situation, even maybe at the expense of some of your core values, of some of the censorship in this sort of situation. The problem is, and where this can intersect is, what if this spills over into the West? And this is what usually we're talking about. If you enter Chinese market, right? Let's say Google enters Chinese market, establishes themselves in Chinese market, is great in Chinese market, and imagine they, like somebody on YouTube or some prominence or something like this, do a Hong Kong protests or whatever. China has a lot of more leverage over Google now because they can threaten to kick them out of the country if they don't remove the content or if they don't do something like this, right? So there is a threat of spillover if these things are mixed. Vice versa, if the Chinese companies in the West, and they have some of the data and research, they have possibly a direct control to stifle some of the political commentary that people do. And this is where tech companies and breaking up of these monopolies or something is might have the influence on geopolitics, freedom of speech, politics in total. And this is also something to think about. But I'm not going to go deeper into it because like I don't have that much time. This is also a topic for another time. I have two more strands that are a bit I couldn't fit them in a narrative that I was building here. One is companies and social movements. And I'm going to be very brief here. And I'm just going to tell you, like usually, the way to use companies and social movements together is not necessarily in the debates about companies, but in the social movements in this sort of situation. So how do companies change their behavior in this sort of situation, and like why do they change? Why do they change in this sort of situation? Is the pressure that social movements can have on companies, and it's not necessarily, how do you say, by protesting in this sort of situation. It's basically like if you protest and nobody cares, and like it's not getting traction online in this sort of situation, companies are not gonna care. But if this becomes a massive movement, but a lot of consumers are now looking you with the how do you say, how do you even call it in English? I don't know. But looking you more closely, this is a threat to you in this sort of situation, and you have to change certain ways. So currently, you might have tolerated sexism because it's easier for you to sweep it under the rug. Because like if it flows out, you have a PR catastrophe. It's easier for you to do so. But now, in the age of Me Too, a lot of companies are not willing to take the risk of somebody being a liability. They're basically looking at these people of harassers more like a liability. And this is maybe how you can show and influence the power of the social movements when you get a critical mass. Not necessarily when you lobby politicians, not necessarily when you how do you say, protest on the streets and get a new law passed, but by changing enough minds that enough people are willing to sign on to your message, to say enough is enough, means that companies might be starting to change themselves because they don't want to lose these consumers, because the PR catastrophe is not worth it, right? It's just like there's a risk assessment there. Like, I know there is a benefit of holding this, I know this, but like there is a risk of you being a liability. I'm gonna fire you. I'm gonna do a more how do you say, HR strategy. My HR strategy is going to be better. So as I said, if you threaten my, how do you say, and not necessarily, as I said, it's not necessarily even a direct thing. It's not necessarily a boycott Nike or something like this. It's mostly, as I said, the threat of this, how do you say, thing happening. And this is why you saw a lot of political corporate activism, is because they saw a lot of benefits from it, right? Because like if you're politically you do a commercial that is that is promoting a social justice message. You like backlash. Come on, nobody's gonna stop buying Nike. Like basically people are still gonna buy it. Like it's a calculated risk. Same as Gillette. With backlash is giving you traction. Backlash is giving you relevance. You have a lot of defenders. You might have lost some of the customers who are probably not loyal to begin with, but you gained a lot of people who now see your brand as representing something bigger than your company, which means, if you're feminist, go to my company or something like this. When you, as a socially conscious person, are like, yeah, if I buy this or this product, I might be supporting this like more noble company that is better, that has a female CEO or something like this, so I'm going to gravitate towards it. So there is a social justice battleground. It's not necessarily because they're woke and these boards are woke. No, because they learned a way to exploit people's wokeness to buy them into the brands. And basically this is like capitalist social movements, right? And like making you buy more stuff. It can be a positive thing, and this is where your framing can be a very good thing, which is to say, as I said, you don't have to change anything crucial to have a huge change in like corporate behavior, because you just need to make it like a liability to hold these people, make it more threatening and make it more appealing, and make people like I don't know, more conscious consumers, so that when so companies start competing with this. It's also true for environmental messages, and this is a bit more shaky, right? Because it's very popular to be green. Not necessarily like obviously some companies can't. Like if you're an oil company, you're gonna be an oil company anyway. But like a lot of companies are trying to do stuff like, look, we planted this many trees, we are very green, we have all of these green initiatives, and try to cover themselves and cover what they're doing in other backgrounds with good things that are doing here. Example, sorry, let me read the questions. Different companies internalize. I'm not sure that I understand the question. It might be my English. I'm sorry. Could you rephrase, please? I'm very sorry, Bexley. In the meantime, I'm gonna just return to the thing. So as I said, you are trying sometimes to offset the bad and negative things that are doing with these woke points and these like good things that you are doing, which also might be like, and this is where you also see a lot of debates happening. What might be a bad thing? So you might have like horrible working conditions in your factories, but it's offset by doing something good in the West. So this might be a trade-off, and you might be letting some of these companies get away with horrible policies because because they're doing something that we agree on. But as I said, this is a short thing, but this is how you can use corporations and their incentives to prove why some social justice messages are going to stick or not stick, why they're good or not good to be placed there. So this is good. Lastly, is just companies and like justice, and not necessarily justice in terms of like social justice, justice in terms of like a legal system. And I'm going to just talk about two things. 1 second. One is this, how do you say, crime, like financial crime that is happening. And another one is this international arbitration, how companies are settling their disputes in this sort of situation. So just the one thing that you need to realize. Yes. Oh, sorry. This is how I understood it, but I wasn't sure. I'm sorry. I'm sorry, Bexley. So this is yes. But as I said, like I think this calculus is pretty much done by looking at who are the people most likely to backlash. But backlash, remember, algorithms in social media usually works by things that are getting more traction, the more, how do you say, backlash you're getting, and the more people are fighting, right? So this means that even though you might have bad press and you might have backlash, right? it still means, and this is also a good framing why companies would not be doing it good, because it's not necessarily in the interest of company to make the best progressive message. It's in the interest to stir some pot, right? Not necessarily every company, because if you have a very good branding, this is why Coca-Cola doesn't do it. You don't want to. You are sticking to your branding. But for example, Gillette. I'm not associating Gillette with anything. I don't care, right? Like in this sort of situation. But the fact of the matter is that, like, for 10 days or like a month, everybody, YouTubers, like, and their mothers, everybody was making their commenting on this, like debunking this commercial, and then somebody does debunking of the debunking, and the third person is answering that person. Means that everybody heard about this commercial. Like, people in Serbia who like maybe don't have like those social justice movements that developed as in America in this situation. Everybody had some opinions about this commercial, right? Everybody like was either for or against it. And given that, and this is the calculation risk, right? Like you are calculating, are people actually going to stop buying your brand, and who are these people? And what I would be calculating in my head probably would be, look, people who are stopping to buy my brand were not really caring about my brand that much in the first place. But people who am I gaining are people who are now associating my brand with a positive thing. So they're now being like, yeah, if I don't know what is the competitive of Gillette. I have no idea. I just like, this is the thing. Most of the people don't care. Even after this, people might be mad. Most of the people will not care. The delta is what you care, and it's how many people will really be mad for next 5 years. And I think the corporate, weighing is basically that these people are smaller, or they are not either buying your thing in the first place, or they're not loyal consumers. Whilst with this, you're buying a loyal consumers, because now these consumers that really care about this social messaging think that by buying your product, they're supporting good messaging and good stuff, which might not be true. As I said, it might be covering up for your some other thing, but you're buying brand loyalty with this to some extent, as I said. So this is, I think, the trade-off in their mind that they're thinking. And as I said, like, controversial is not necessarily, especially if you're not, if you don't have anything to lose in terms of like PR strategy. If you're an established brand, if people are already associating stuff, this is why Apple will not do it. So Coca-Cola will not do it. But this is why Gillette or some of these firms that are smaller, that are not really having, like, who the fuck associate these brands with anything, want to be associated with these things, and they have a benefit of possible negative press, because, as I said, this will be top trending on Twitter. Everybody will be recording their videos against it, and this is the thing. And this is a very cool, as I said, these framings and stuff can be used in a lot of social justice debates, a lot of feminist movement debates, which is I think very cool, and like not necessarily as the main thing. Like, this is not by itself going to win you the debate, but it's going to be additional argument that you can tackle on. How does this like, I don't know, why will companies follow? Why will they do something like this? And why is this crucially important? Changing corporate structure or something like this, holding them accountable. Okay, I hope this answers the question. So let's move on to companies and justice to some extent. As I said, like, it's not really justice, but like it's courts. So as I said, crimes that you need to be aware of, and this is what a lot of these companies have been dealing with, is that, like, by holding a lot of these information, and this is not like I'm moving away from big tech, means that you have a lot of information that you can utilize by yourself to gain financial gain. This is what's called insider trading, right? If you have privileged information as an executive board or high-valued investor, and you act upon it before the public knows about this, you can go to jail. And the punishments are super high. It's like 25 years. 25 years in jail or something. The problem is it's very hard for you to prove this. That's one. It's very hard for you to prove. This is also the most common. This might be cool for criminal justice. This is the most common white-collar crime that exists: insider trading. I'm not sure. I knew some statistic, but I cannot really remember it now. I'm not gonna do it. So that's one of the things. So you're basically, the reason why this happens is because, like, you don't, like, if this was allowed, people with privileged information would be fucking over general public overall and be fucking over stock markets. Usually people are talking about, but this is a victimless crime. It's not. Like, shareholders, public, economy, these are all of the negatives of insider trading. because as I said, like you know that company. Let me give you an example to illustrate. You know that company is gonna, how do you say, sell off some of the, like close the factory or something like this, and you sell the stocks before this is public. You saved yourself a lot of money. Some people who bought the thing from you lost the money in this situation. It's not really fair for the economy overall. It might lead to like scams, like people, and this is especially like concealing some of this information, especially usually harms things like pension funds. Pension funds like a labor, how do you say, a labor inside of the company that does not have any of these information, that are going to be shorted, like giving yourself bonuses before, and this is the thing. Second of all is misleading the public with the how do you say, with information that is public. So lots of public company have the obligation to, first of all, have a detailed report to their shareholders, but also publish quarterly reports towards everybody, right? So you can now most likely find quarterly reports for most of the companies that you want, what they're doing in this situation. So misleading and cooking the books is usually something that can happen. And usually we have one large scandal in this situation. Currently, I think General Electric is under one of these scandals, but we will see. But I heavily encourage you, I don't have time to go into these, but like I heavily encourage you to look up Enron and what Enron did. It's quite interesting, actually. Like there are so many documentaries about Enron. So it's ENRON. It's quite interesting how they managed to cook the books, how they managed to basically to convince the public that they're this huge company whilst having mostly nothing to offer in this situation. This is quite crucial for you to understand how companies can scam the public and why some of these things, how these things can be regulated, and usually can be used as a framing mechanism. If somebody's talking about this as a super safe thing, if you talk to people like when Enron was at its peak, if you talk to people, is Enron legit? 90% of people would say yes. Like you would be crazy not to invest, not to buy their stocks in this situation, and look at where it led them. And like a lot of people lost their money, right? So look at this. Also, the Theranos is like quite an interesting. This is like a startup about like blood testing, and like, just look into it. Like it's basically a scam that operated like innovation, like exploiting people's belief in innovation. That innovation is there rather than not being there. These are the two examples that I would say. Most of the companies, when they're dealing with courts and when they're dealing with claims, are usually opting in for settlements rather than going to court. Why? First of all, and that's if you have a legitimate claim. If you don't have a legitimate claim, obviously they can intimidate you with 1,000 lawyers that they can have, which is like a double-edged sword. This is the thing. If you're big corporations, you have access to shit amount, like ridiculous amounts of lawyers, right? Like they can research, they can boggle other companies with paperwork, and this is what usually is done. Like if they want to sue somebody for patent infringement or anything like this, they do an intimidation thing, right? Like the intimidation thing is basically either flood them with paperwork, basically exploit every nook and cranny of the system that is quite broken, that is going to say to the company that is suing them or a person that is suing them, look, this is, how do you say, you're going to be buried for years in this litigation. We can afford to lose this money. Even if you win, you're going to lose. So that's basically bad. And especially in the system, I think the US, and I'm not sure, because like I know in Serbia and in Europe, it's not like this. Everybody pays their own cost of lawyers. In Europe, it's quite different. In Europe, if you win, they pay your legal costs. Obviously, if it's reasonable, if you went overboard or something, that might not be the case. So this might be offsetting and increasing the amount of litigation and people willing to come forward against the companies versus America. But usually the settlements, if there is something that has a chance of going public, and this is how the small person can fight back. This is why usually scandals, even though they might be like shit or something, get a lot of huge settlements. This is like on the famous "Don't microwave your cat" warning label on how do you say, microwaves. Now that came from a person receiving a large amount of settlement, a large amount of punitive damage that was paid because they had no warning that you shouldn't microwave your cat, and her cat died, which is crazy, but yeah, that's the extreme example. But the less extreme example is that in the US, you have this punitive system where it's not necessarily the damages that you're paying to the person. It's not necessarily there to just compensate the person. It's also there to punish the company and set an example so that other companies are not doing the same thing. So usually this is why, first of all, it's very risky for some of them to go to court. So if somebody has a legal thing, they would try to avoid it because like usually these are the billions or something can be charged to them. Like I don't think there is even a limit. But if also the second consideration is this PR, because like a lot of people sympathize with a small person in the courtroom going up against 5 lawyers trying to intimidate them and do something like this. So this is why usually it's easier for them to settle than to fight a PR battle and do horrible things, especially because they have to acknowledge and they have to play nice to some extent. To some extent, this is, as I said, this has not been true to the fullest extent, and obviously behind closed doors, they are trying to intimidate the person to accept a smaller settlement, trying to make them uncomfortable, trying to pierce their case. And this was horrible situations, especially in sexual harassment lawsuits. But usually companies are willing to settle and are settling. And usually the problem with settlements is that these non-disclosure agreements prohibits the victim and the person who received the settlement from ever talking about the thing. And this is sometimes something that can prohibit people who are not necessarily just sexual harassment. Sexual harassment is the most prominent example, obviously, but like abuse at work, mobbing, being treated unfairly from ever talking and coming forward, which might allow these companies and these abusers to continue going on. And this is why some of the debates by prohibiting settlements in this sort of situation, there is a trade-off, obviously, because like if you were to push company to go to trial, obviously they will be merciless. Obviously, you can have the framing, as I told you in the beginning, why companies can't be as merciless, because it will be a horrible PR stunt if you were to I don't know, ask very horrible questions to the sexual harassment victim or something. This how the media will perceive it, because lots of these trials are public. But still, it will be quite uncomfortable if they're pushed. They would have to do it. They would be merciless, and this means bringing up your past. This means like I don't know, like basically trying to intimidate you, like mobster style tactics, which is quite funny that legitimate corporations are using similar tactics as Al Capone. Anyway, so this is about settlements. I don't have that many things more to say. There are not that many debates about it, but I just wanted to cover it. And lastly, this is international arbitration. And this is, again, another way for you to settle a case. It's not necessarily, you can settle it in court, obviously, but you can also settle it in like international arbitration, which is basically we pick arbiters, like we have a selected pool, depending on how did we agree. Is it ad hoc? Did we agree on spot that somebody's going to arbitrate us, or did we agree in our contract? This is what usually is happening, like in labor contracts. When you're signing your labor contracts where you're working for, you're usually signing a contract who is going to settle your disputes, and you're tied to go to that instance in this sort of situation. And this is usually preset arbitrations. There are very famous ones like in New York, in Paris. It depends. They usually specialize in. And also you can pick a law. You don't have to abide. You don't necessarily even have to abide by the law of some of the countries. You can, especially if it's an international thing, you can pick by which metric it is going to be arbitrated by. Sorry. The benefit of international arbitration is speed. Right? So this means that usually what people are claiming as the negative is that obviously these people are going to vote for the corporation. They're mostly tied to the corporation. They're bringing them more business. It's not that simple. And this is the problem when I see the international arbitration being brought up. People simplify things too much. It's not as simple as judge being like, look at this worker, look at this corporation. Obviously, I'm giving it to the corporation. They have some, first of all, ethical boards. Obviously, nobody would be willing to go to them if they're not fair. To some extent, they have scrutiny as well. They cannot really arbiters are not really likely to do whatever the fuck they want. It's not necessarily that bad. It's still bad to some extent. It's still, when you see the rulings, in a lot of cases, they are voting in companies' favor. but not necessarily completely. It's not also 1 versus 0. It's also maybe part of your claim will be satisfied rather than the full claim as the labor, like in the labor dispute or something. So it's not necessarily, it's not comically bad as in, you go before a judge and he says, look at you, the company wins. No, obviously you have oversight, and this is what you will have to, when you defend, obviously this is how you do. In most cases, in most cases, the arbitration works by each of the usually there's 3 judges. Each of the parties picks 1 judge from the pool of judges, and the 3rd judge is picked by the 2 judges together. So it's not like you have no influence. The benefit of arbitration, international arbitration, is usually speed. It's usually how fast can you deal with this case and move on. Courts, because they're overworked, because they have different systems, they first of all tend to drag on for a very long time. They're also quite expensive to do all of the tax, the fees and this sort of situation. So it might be in both of these parties' interest to settle stuff in international arbitration. Once it's settled in international arbitration, that's the law. It's basically equalized in most cases, in most places, as the judge ruling in the place. If you were treated unfairly, if there is a breach of ethical code, obviously you have the right to appeal. But in most cases, if it's normal and like things just didn't go in your favor, you don't have a right to appeal. So that's a negative thing. I just wanted to cover this because like once in a while this debate pops up. And if it pops up, it's useful for you to at least know some of the things. But as I said, I've been talking to you for I'm not sure even how long. I'm sure it's quite long. So I'm not gonna continue that much more. So yeah. So that is almost everything that I wanted to say. So now, if you have some questions, you can ask me. Let me just quickly check in Google Forms. I think I had 2 questions. I think I answered one. But in the meantime, you can ask me one of the questions if you have. If not, feel free to message me. And yeah, we can talk a bit later as well. Let me see. Milos, okay. Yeah, I think I answered actually to both of them, because like you asked, one of them was about principle. I think it's quite, as I said, I think it's quite difficult to do the principle case in these debates. It's not impossible. It's just like it will take you such a long time, and it's the other side should have it quite easy to burst. And to, as I said, like the most important thing usually in principle is your consistency, is being consistent with your principle. And if I show that you are not consistent, or I win on both sides, because like I either show that you're not consistent, or I increase your burden by saying, but what about 100% of the market owning or something like this. So I know it's a popular argument. I've heard it a couple of times, but it's very difficult to do, I would say. Yeah, that is mine. And the lobbying, and the other question was about the lobbying. Yeah, how do you address lobby groups, and what are the positives of the lobby groups? There are no positives of the lobby groups. No, I mean, lobbying, lobbying is a quite weird concept for me, because in Europe mostly, I think it's mostly banned. The positive things about lobbying is that some of the things that you lobby for might be good, right? I'm gonna give me 1 second. I'm gonna answer your question. Lobby, how do you say? Some of the things that people are like, obviously, the first thing that comes to mind when I say lobby is like NRA, big oil companies in research situation. But like lobby groups are also environmental groups, can tend to be lobby groups. Labor groups can be lobby groups in this sort of situation. So depending on the level of efficiencies, what you're lobbying for can be good, right? It can, how do you say, it can have a good goal, and you're balancing that off against like bad lobbying that is creating harm in this sort of situation. But as I said, big corporations, to some extent, if they become big enough, they don't really have to lobby to be important and to have the seat on the table with the politicians, right? Are there any peculiarities in the corporate context in the Balkans? Yes. The problem is the companies are too, and this is the part that I didn't really have the time to cover. I'm gonna cover it in like 5 minutes, like very quickly. So there is a lot of big companies in the Balkans especially are not privately owned, but are publicly owned. And this is a problematic thing, right? Like, I think 3 of the largest companies in Serbia are owned by the government, which first of all has implications in terms of like, I don't know, too many employees working, not being as efficient, but also in the way that government is treating the competitors of, how they say, of these companies. So for example, like in Serbia, you have a huge competition between how do you say, for the internet and for how do you say, the mobile companies, like mobile telephone companies in this situation. But the problem is one of the largest ones is government owned, which means that the access to the infrastructure, regulation, wiggling, and maybe some antitrust laws are not as applicable, and they're not under such a large scrutiny as their competitors are. So this is a danger of this, and it's not that bad. It's not the worst thing, but this is a danger of publicly owned companies. Publicly owned companies. The danger is that the corporations get too cozy with the government, and it starts to become a corruption machine where the competition is shut down, not necessarily legally in per se, but like in terms of favoring who is the regulator scrutinizing, who is the regulator sending the constant checkups on, who is the regulator allowing to, I don't know, price cut or do something like this, or to merge. So all of these things, if they're tied with the government, can have negative consequences, as I said, especially for the efficiency of the company. They might be more efficient for this. On the consumer, because they might be paying more for the things that actually exist. And fourthly, because, and as I said, in the majority of, how do you say, developing countries, in the Balkans as well, and in not developed economies, the main big corporations are usually going to be public utilities, like electricity, like telecommunications companies to some extent, or resource extraction. So this is a bit different, and I don't really have time to go into it because, like as I said, I think I'm going around 2 hours now, which is like quite exhausting as well. So this is something to think about. There is a bit of a different thing how they're competing, but the main thing is, as I said, potential for corruption. And potential for influence in politics and vice versa, right? Like, it's not just they influence politics, it's also that politics influences the company who gets to sit on the board, what they do, what are the company's policies in this sort of situation. And if they're the main employer of the country, it also influences where people can work and how we're making money. Anyway, yes. So as I said, I've been going on for a long time. Thank you for listening to me. I will now be closing this session. And if you have any additional questions, I will try to check this video, like let's say in a week, and see if there is some comments that I can answer additionally. But that's it. And thank you very much.